morning, welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts. Today we're going to talk a little bit about this market rally we had last week, but if you'll stick around to the end of the video, I've got a special offer for you this morning. Going back to where we left off last week, we talked about this sell signal that we had gotten in the markets in terms of our money flow sell signal. That had led to this 3% correction in the markets. Again, we had expected this correction in the markets, but much like we'd seen previously, there's been very strong support right along this 50-day moving average, which has kept this bullish trend intact. Now, this very low volatility trend is also dangerous because the last time we saw this type of low volatility was back in 2017. That led to basically 2 years of high volatility. So again, when you get these periods of excessive bullish exuberance, where there's virtually no expectation of loss, that potentially leads to instability. This is what we talked about in this weekend's newsletter on the website about Hyman Minsky's theory that periods of stability lead to instability in markets, particularly when there's a lot of leverage. And that's what we're seeing now with margin debt now at record levels as well. The good news here, though, is that this rally on Thursday and Friday last week was really strong in terms of retail investors kind of piling back into the markets. We see this kind of big spike in money flows. That's all very positive. That began to turn this money flow sell signal back up. Now, we did not cross back into a buy signal yet. So again, this may take another couple of days here before we actually get that money flow buy signal back into place. But again, we saw this period previously very similar to where we had a sell signal that had gotten fairly oversold, began to turn up, money flows were positive, and then the market corrected after the fact. So again, there is risk here that this potential rally that we had last week, it was very light trading volume. We're very extended from the longer term means, and we're back very extended from even the 50-day moving average. So this week we do have a lot of earnings coming in from the mega cap companies, which have really been the driver of this rally over the last couple of weeks in particular. And Apple, Microsoft, Google all announcing this week. That could provide some supports to markets this week. But after we get past that, we're going to get into August and September, typically weaker months of the year. So again, while we'll likely potentially get a short-term buy signal here in the markets, may get a little bit more upside in the markets. Upside reward is potentially very limited here versus the potential for downside risk. So a little bit more concern about risk management may be prudent here. Now, we go through a lot of this stuff every day on our subscriber site, riapro.net. So if you go there today and want to check it out, I'll give you a 30-day free trial simply for signing up. Try it out for 30 days. You'll get all of our daily market commentary as well as our portfolio trading that we do there. Of course, full research capability to research your own stocks. And very shortly, we'll actually be adding these money flow sell signals to the website there as well. But I'll give you a 30-day free trial for checking out riapro.net. We'll see you tomorrow.